Hello, my name is Brenda Hayward. This video is called Ways to Consider Paying Off Your Mortgage Early. Some of these ways to pay off your mortgage faster can be used as a reminder to do things while building or starting your journey towards paying off your mortgage. It is time to empower yourself with things you can do for yourself. One, because if you're considering retiring in less than 10 years, paying off your mortgage ahead of retirement can reduce the decision of if you should work a few more years. Check to see what the real amount might be coming into the home through budget planning. Most of the time, it is lower than what currently bring home. Monthly expenses will be cut. Extra funds can be utilized for property taxes, emergency repairs, or inflation increases. It cuts down on your living expenses, enables you to pay off any debt accumulated. When you make this decision, review your loan agreement to see if you have to pay a prepayment penalty. Just knowing if an emergency arises, you know that you own your home outright. The decision making power is in your hands. Think it over. Make a budget for your current income and expenses. Get an estimate of what your income can be when you retire. Look at the numbers and make a decision only if you have the power. Two, another way to consider if you received an unexpected windfall. Did you finally sell one of your homes and decided not to buy another house? Or did you receive an inheritance or a house and sold it now? The funds are now available to you to make a decision. Your first decision on any windfall was to use it on items you always dreamed of. However, one option is to decrease the amount owed on your mortgage loan. Remember, regardless if it is paid down, the mortgage payment structure stays the same until the cost owed is fulfilled. Check with the bank before you mail that check to see if it will be penalized for paying off your mortgage early. Some banks do charge fees for this type of transaction, or if you still have a copy of the loan agreement, please review it. It has prepayment section and the requirements. Notify and confirm what is needed to ensure the funds that go towards the principal portion of the loan. Please contact the lending company to ensure that you and they have the same payoff amount. A quick call to the institution can help you in your decision making. Three, consider mortgage recasting with the lender. Recasting involves making a lump sum payment that reduces the current mortgage balance, which can lead to lower monthly payments. Just a heads up that mortgage recasting is simpler than refinancing. However, you will still have the same interest rate and the length of the loan stays the same. Some advantages to this are that the bank will not perform a credit check, no closing costs, and no lengthy application process. If you receive cash as a gift or inheritance, recasting your mortgage is a great way for investing in your future while investing in your home, enabling you to keep more money in your pocket. Loan recasting reduces your loan principal and reduces your monthly payment amount. However, after you checked with the mortgage company, the change in the payments might not be as good a reason to pay down your mortgage, and you may want to put the funds somewhere else. Four, consider making paying off your mortgage a priority. First, you need to set up a budget and get all those monthly and yearly invoices out of the cabinets and the drawers. Review your income and expense columns. How much is left after all the expenses is paid? When you look at your funds, and you may see that the discretionary funds should be reduced, or that you have items that you still are paying. However, you have stopped using. Chances are that those items that are no longer needed and the reduction of discretionary funds can be paid towards the principal balance of your mortgage loan. Even after reviewing your budget a second time, the income and expenses are correct, then you need to consider how can you increase your monthly income. Maybe you will be willing to take a second job or ask your boss if you can put in more hours at your current job or ask your boss for a pay raise. 5, consider refinancing your mortgage home loan. Before you act, the best time to contact your lender is if your credit is okay and you are not behind in your payments. The biggest part of the transaction is hoping you can get the current interest rate lower than the one you received on the initial mortgage loan. Refinancing can reduce the length of time on your loan, which means you get to pay your home loan off quicker. When it comes to refinancing your home loan, it is similar to getting a new loan. If you are working with the original lender, there might be a few surprises. So check with your original lender and see if you are eligible to refinance with them. If not, then shop around. The option you have when you decide to refinance is the ability to get an interest rate. If the interest rate drops 1 or 2 points, this could affect your mortgage payment. When you are ready to make a decision, make sure you get all the information before making a decision. Contact a lender to get all the information needed for you to take home and make a decision. Another option is available to you is the ability to shorten the length of the loan, maybe from a 30 years to 20 years. Just think, your first purchase of the property might have wanted a short-term length. This is a great time to ask to see what the new payments will look like and if they can fit in your current budget. Financial freedom is a great way to have control over your funds. Only you have the power to make the decision that is right for you. Sit down, pull out your budget list, and see what is right and make the right decision when you can begin paying off your mortgage faster. Just to let you know, I am not a real estate agent, accountant, lawyer, or loan officer. Please let me know if you like this video by clicking a thumbs up, subscribing, or leaving comments below. My name is Brenda Hayward, and thanks for your time.